Is the cycle ending early? Are there reasons to be selling Bitcoin and cryptos and potentially stocks as well at this stage in the cycle? That's on the agenda for today's video as Bitcoin hangs on precariously to the support level here, roughly around $60,000. Plenty coming up on BTC. I've also got the altcoin market to get through with you guys. Some major declines here for the stock markets, which has prompted these questions here around the cycle and potential reasons to sell early. Now, if you have followed me on Twitter, which I suggest you do, or X, down below, I've covered a lot about the wall of worry, which I'll get into in today's video, but that's basically like a back catalog of what's happened over the last 2 years. A ton of history there. So without further ado, let's dive in, guys. You guys have been amazing, smashing the like button to help us beat the YouTube algorithm. I'm testing out not putting in ridiculous headlines and stupid faces, so I need your help to, I guess, further that journey. Let's go 3,500 likes in today's video, and we can try and beat the YouTube algorithm. All right, so first up, going through just some of the news headlines very, very briefly. Stock market news. We've seen the stock markets fall a little further. Not much else has happened here after the big news of the weekend with the war breaking out in the Middle East, or attempting to break out. At least that's what the news is telling us. And you might have recalled from a couple of days ago, I suggested that low bar, which was on Saturday when we first saw a lot of that news coming through from Iran trying to send a lot of missiles over to Israel. Sometimes these type of events mark significant lows, or they can mark intermediate lows. And so far, that's precisely what has happened. So we've seen that low, the market rallied from there. In this case, Bitcoin has rallied from that point, and it got to our potential resistance level, as we pointed out in yesterday's video, looking at $67,000. So it fell $71 short of hitting that exact price, which is barely a fraction of a percent there. So now it's reversed significantly, down 3.5% on the day, coming back towards 63,000. I'm going to cover this just a little later on in the video, should we see a 60K break and what we could expect to the downside in terms of price levels there. I've got a little bit more to get through on this particular chart, looking at very key price levels based on the chart here with significant swings, of course. But I just want to cover off where we sit with this war news here, which seems to have lost a little bit of energy over the last 24 hours when it comes to the market sentiment itself and the price, at least for BTC. The technical term for this is the wall of worry. Essentially, it's markets, financial markets, trending up over time, but showing signs of dips when there is some extreme bad news. So this extremely bad news typically, as I said, puts in lows or significant lows or sort of local lows in the market, and then we start to build from that point again. Meanwhile, the masses are sort of sitting in fear or extreme fear, and they're missing out on these opportunities. So I want to have a look at how we can identify these areas around these points. We're not trying to pick the exact low. We're not going to buy the exact low point, but around those prices, as we have done here on the channel in 2022 and 2023. And I'll show you specifically on the charts, and you've got all of the receipts there on X as well, as I went through with those particular posts. But if you're unfamiliar with this, familiarize yourself with it, because this has been going on for decades upon decades. It's the same sort of thing. Wall of worry is the financial market's periodic tendency to surmount a host of negative factors and keep ascending. That's what you would see in YouTube and X all the time, just tons and tons of bad news headlines around why real estate should be crashing, or stock market should be crashing, or any number of reasons why anything should be crashing. Yet over time, you always see the markets go up. That's essentially what the wall of worry is. And essentially, you can find a lot of these charts here that will point out every single bad news event that's happened along the way. Sometimes it's around local tops, sometimes it's around local bottoms. But essentially, over that course of time, the markets trend up. And typically in a major bull market, we don't necessarily see very significant corrections, as I'll show you in just a moment as well. Now, if you do want to follow here on X, this is the post here that I started back in May, and then listed out a lot of events from 2022 as well, and showed the timing of those for that wall of worry. So it's essentially like, I don't know, like a textbook or a back catalog or something like that, where you can see these events playing out, and then you can pinpoint them onto the chart themselves. So that's how I like to use this here, and I've added the interest rates to it recently. Speaking of interest rates, this is fresh now. One interest rate cut for 2024. Now, of course, this can change tomorrow and we go back to 2 interest rate cuts, whatever it is. The main point that I make here with interest rates and how the masses always get it wrong, or almost always get it wrong, is that majority were expecting interest rate cuts at every single meeting throughout 2024. You've heard me say that before. And now we're down to 1. Yesterday, there was a brief moment where we even saw an interest rate increase for September. That has obviously come back down here. And that this one here in December has jumped up. So if you're unsure of how to read this, I saw a couple of comments about that through here. You're just looking at the blue and then looking at the column. That's the interest rate. And this is the probability of a pause, which is the current interest rate here, an increase, which would be right, or a decrease, which would be left. And so far, today, we're basically 3 pauses, 1 cut into September, and then pauses again. And then, I suggest this is probably going to go up this way, and then probably another cut in January of 2025, and then it would just stay around that for the next 3 meetings. So this is really squeezed to the right, meaning less cuts, maybe even just pauses for a little while, maybe even going into the increases soon. But the main thing that the market has to do now is digest this move, which of course is causing some fear out there in the markets, along with the war over the weekend. So essentially, just wanted to understand how we can read this. I'm showing this again because I think it's really prudent to keep track of some of the seasonality around the markets. Essentially, this is kind of what happens in these years, election years, that is. We have an election coming up at the end of the year, or a US election coming up, and you typically see a grind sideways. You'll see some corrections just depending on how hard the market has run. You can see the blue line, sitting president running in the election year, excluding 2020 behind my head. That's what it says there. That's because we had the COVID crash there. So looking at the blue line here, it only went up about 4% into the peak there of March. And you can see it hit March again and then had a slightly higher peak here in early April, and then basically didn't do anything and went sideways and down into June before it started to climb again into August, September, paused again, went down slightly. Coming into the election, then you start to see it run away. This time, however, we've had a pretty significant run in the first quarter. This basically got to April 1st before we saw that top. And then the markets have corrected from there down about 4% or so from the entire move of 2024. Essentially, that's what the chart would look like now if this was updated. So we might see more volatility, but you can still see that would probably be some sort of sideways churn just based on the historic charts here. And so looking at the question that I've posed here, is the cycle ending early? Are there reasons to be selling out? So far, everything still seems on track according to history and according to the charts. There hasn't been any significant breakdown, although we've seen a pretty significant move down at this point in the market. We're down 6%. I pointed this out on the channel now a couple of weeks ago. Here we go, 10 days. Bitcoin is entering the biggest stock market correction in over 6 months. That was confirmed with the Dow Jones falling to its biggest correction. I'll just move this here so you can see 5.5%. This had moved down and got us to one of the, getting close to one of the biggest corrections because it outdid this correction here, and then it's continued on. So the Dow Jones now has a bigger correction than 6 months ago. So I could change that and say it's a bigger correction than 6 months. Doesn't matter. The main thing we're looking for here is an overbalance in time, overbalance in price, and a break of major support to give us reasons to potentially start to ease up on the positions if you're in these markets. They would be the major signs that this cycle could be ending early. And then we'd have to look forward to sort of the weekly and the monthly chart. Right now, we're just on the daily. We've seen an overbalance in price. There's 2,447 points. Previous to that was 1,900 points. So this is the largest correction now in terms of price. It hasn't exceeded it in time just yet. You've got 11 days here, and we're only at 9 trading days here. So a couple more days to go, and then this would potentially exceed it in time as well. And then you've got to get back down to breaking these lows here, roughly 37,000. Plus, there's still support back at 36,300. So there's still a fair bit of support to the downside. That would take it out to about 9.8% if it was to get there for the Dow Jones. Now, just before I get on to the E-mini here and the NASDAQ. I wanted to show you the corrections here on the monthly chart and what we've seen in the past, just as an understanding that corrections happen and then what happens after that point. In these grinding bull markets to the upside, this has been a quick, fast move down. Nothing out of the ordinary so far. Typically after a red month, not always, but I'm just saying typically in this entire move over the last 15 years, and you could go back previous to that as well, essentially after a red month, typically you'll see a green month. Now there's normally 1 to 2 red months. Some cases, like you can see here, there was 3, that was basically flat, and then a couple lower, which was still holding above their previous resistance levels. And you got a period here where in 2011, that was a significant correction. It was still early days after the COVID collapse. And then this was the higher low in the real estate cycle. So you got the real estate and economic cycle. So moving on from that point, you can go through the entire history here. If you wanted me to spend another hour here, I could do that. But essentially, a couple of months, red, then green, red, then more green, one red, one green, one red. We sort of move on again. Even the COVID crash had 3 red months. But these months, well, this month here was higher highs, higher lows. You had 2 significant red months, and then basically it was on again for more green. Even the bear market of 2022 was 2 red months, 1 green. You didn't even see 3 in a row. The last time we saw 3 in a row was late 2023, which then spurred on this 5 months to the upside. So I'm just putting that out there to suggest that doesn't mean just because we're in this first red month, it doesn't mean things are over. And just to keep a level head about the markets, because as we've covered before, the wall of worry can really start to drain on people or investors, and only to see the market then head up after that point without them. The S&P 500, same sort of deal now. We've got the largest correction. There is an overbalance in time and price. Remember, it's still got to break major support. So that's these levels back down here, roughly around 5,000 and 5,000 to 4,900. And then the major 50%, which we are a long way from at this point, would be back down to this October low, somewhere around 47. So let's just play it one step at a time, watching what the reaction is at around 49 to 5,000 points. So 4,900 to 5,000 points. NASDAQ, also same sort of thing. It's coming up towards one of its largest corrections for this entire move. Remember, it's been 5 months up. So I think that's a really important point here as we continue on. Now for the US dollar, it's still climbing higher. We're on the daily chart here. As we pointed out, resistance at around 107. So nothing's out of the ordinary here. Watching how this market reacts to 107. Because if this keeps going up, then that continues to put pressure on assets, meaning stock markets, Bitcoin, we've obviously seen that come down. Cryptos have obviously gotten slaughtered. But essentially USD is up, assets potentially down or pause. Bitcoin showing relative strength while USD is rising. So this has been rising. Bitcoin's still in its trading range. So we're looking at this trading range now of around 48 days between $60,000 and $74,000. I'll get onto this in just a sec, but obviously the news that's come through, Bitcoin ETFs and Ethereum ETFs are being approved in Hong Kong. I think this has actually gone through now. Just in, Hong Kong approves spot Bitcoin and Ethereum ETF applications. We haven't really seen much happen in terms of the price. That's the power of cycles. Cycles within cycles, shorter term, longer term. Right now, the market is not so strong. It doesn't take a genius to see that now. But we've been talking about this for weeks on end, that it seems like it was overextended. So you got this fantastic news of ETFs in Hong Kong, essentially China, as some point out, and the price is, well, it's down 3.5% on the day. So it's always, from my analysis, it's always most important to refer to the charts. The news will play a part in the cycle. Maybe it ran up into that news and now it's basically reversed again, because essentially we still need more time at these levels to test whether there is going to be some strength in the short term or in the longer term. Speaking of that strength, well, we saw the fake out that led to weakness. We saw the failure here at 67,000. That again led to weakness to the downside. So around 59 to 60,000 now is the support level. So that takes us to this macro chart over here. Now these significant levels to the downside, that's the 1 month close there at 61.4. So we'll keep an eye on that as we head into the end of the month. We've still got another 2.5 months to go until the quarter closes. But in the past, there has been 1 to 2 red quarters each cycle. And that's nothing out of the ordinary either. This was a red quarter back here. This is also a red quarter. I've got it on a monthly chart, but yeah, if we throw it on the 3 month, trying to make this quick for you guys as well, you can see we had red quarters, and they were still within the price range of the previous quarter. So if that were to happen now, it would probably be an inside month. You'd have potentially a lower high if it remained at the high price that remained where it is, and the low price here is at 36. So I don't think it's going to get to 36,000. Of course, I don't have the crystal ball, but if that is the case, right, and it stays above 36, you could have a red quarter, but it's still within the price of the previous quarter. So you wouldn't even see a turn down in that, which is still relatively strong. So we've seen one red quarter so far. This potentially is the second, because as you get towards the end of the cycle, things just absolutely go nuts, and you'll see multiple red quarters in a row, which at the moment we've only seen multiple green quarters in a row. And at the moment we've only seen two green quarters in a row. In terms of these reasons to sell, part of the wall of worry, which you can check out on my X account, these reasons to sell quite quickly were extreme news events for Bitcoin and crypto. May was the Luna collapse, and June was the DeFi collapse, or vice versa. Either way, essentially there were some reasons there that Bitcoin was over, and this whole thing is dead and done. FTX has screwed us, which led to FTX collapse here at the low, and then another low here was the banking crisis bottom. Then we had SEC suing Binance, which was essentially an attack on crypto. And then in September, there was more stuff around Binance, the SEC, more lawsuits and this sort of stuff, which essentially led to that higher low before the market went absolutely ballistic. So a lot of major reasons to sell at the bottom. But if you had the patience, and that patience was over 12 months, sounds a bit crazy, but if you had that patience, well, then you're reaping the rewards to the upside, and you just got to hang in there at this stage of the cycle. So they're the prices to the downside. Plenty of reasons to sell. I don't think that's the case right now. The reasons to sell in the bull market will come from typically a lot of good news, like we saw in March of Drake posting about Michael Saylor and his portfolio and how great Bitcoin is. That is a sort of scary thing because of how much greed there is in the market. It's not the other way around, in my opinion, which I've just talked about here with the war news that has gone on over the weekend. So if we look towards the downside now, in case of any breakdown of 60K, well, the quarterly close is here in March. That's the highest quarterly close so far. Last month was obviously the highest quarterly close, but this is the one prior to that. So that's at 58.8. Call it 59K, which is essentially March's low. 50% is at 56K, and then these are the two major ones back here, your 52K and 48K. So they're the big ones to watch in case we do see further downside. But essentially, if it was a quick wick and then higher closes, no bad signs whatsoever. Longer term, just great entry opportunities if you can stomach those particular moves to the downside. And in terms of the fear and greed for crypto, we're still sitting at 65. I pointed out yesterday that this has been the least feared bull market, just according to the data we have from the fear and greed index. If we look at the low point, which was November, Bitcoin and crypto, well, the whole market essentially has only been in the extreme fear stage once. In previous cycles, for the data we have here, it's been in the extreme fear reading multiple times leading into the peaks, and that was the second peak there, and that was the first peak of the 2021 cycle, and it even hit it within the cycle itself. As it was coming towards the top, it was still able to scare a lot of the investors out. So we haven't even reached that stage yet. Maybe this is the time that we do at least see one sort of extreme fear reading. We'll have to wait and see. If that is the case, then it's going to be prudent to keep a very strong eye on strong altcoins. Now, that is a chart of a strong altcoin. I'm not telling you to buy fetch.ai or FET, right? I'm not telling you to buy it. I'm just looking at a strong chart in its current state. If this goes underneath these levels, that is going to be weak. The main things to watch here are the 50%, the previous tops, which are the support and resistance, and then the previous accumulation range, somewhere around that level there, around this white line here as well. If it drops into that zone, that is much, much weaker. And this is the altcoin against BTC. It's not saying that it can't go up later. It just simply looking at the chart, it has more work to do to get back to strong a strong stage of the chart, a strong area, which would then give you easier returns to the upside. So, that's why I'm paying particular attention to the altcoins against their BTC chart. You want to see strength in these charts. You don't want to see them breaking down. And of course, I can easily pick on a million different altcoins, but I always pick on the one so that you can see the progression here. XRP BTC, it continues to break lower and lower, which is why it does not do the same sort of gains as, 100, 200, 500 different altcoins that are in the top 1,000 altcoins, right? This is the biggest reason here. It's just so weak against its Bitcoin value. Sorry to pick on the XRP crew again, but you can pick any altcoin that does this and just continues to break down. I don't know why people keep talking about this and they love it so much. I'll leave it up to them and they can enjoy their losses or very, very tiny gains. What we're looking at now is the correction on the altcoin market. Still looking relatively strong longer term, which could lead to this mega fifth wave to the upside. As I said, it could lead to the mega fifth wave to the upside. For now, it's done what it's done in the past. 4 weeks down, 4 weeks down, 7, 9. Previously, it did 4 weeks down, 5 weeks down, put in a higher low, and then pushed again. So, and then here it's also hit the tipping point and had a pullback. So previously, it hit the tipping point for a short period of time. You can see multiple weeks here, and then it took off from there. For now, it's basically hit it, and we're having a little bit of a pullback after such a significant run in the first quarter of 2024. So all sort of healthy corrections at this stage for the altcoin market. Right now is the time to be rotating into those strong altcoins, getting rid of those dead altcoins, as we talk about often with the members in TIA. Links to that are in the top of the video description. We'll go through in detail how to pick those altcoins, which are going to be stronger in any sort of altcoin season or altcoin bull market, and stay away from those weaker coins that just continue to break down against their Bitcoin value. That's it. Hit the like, 3,500. Appreciate your support, guys. I'll see you back here at the next video. Again, I don't think the cycle is ending early, and I don't think there's any reason to be selling in terms of a rotation. I think there are plenty of reasons to do that when it comes to weaker altcoins. Thanks again. Take care and peace out.